Hello, Oracles. Well, this morning, as many of you probably saw, we saw a massive pullback in the stock market. Now, we've been seeing a pullback for, basically the last half week, but some news that we got over the weekend based upon some of the jobs report we got on Friday really just accelerated the whole sell-off today, making things significantly worse. But what does that mean when the market sells off? We get to buy our favorite companies and our favorite ETFs on a discount. So is this going to be the end of it? Are we going to bounce from here or are we going to go lower? Nobody knows that for sure. But today I'm going to go over some of the things that you can do to prepare for this if you haven't already. And if you haven't prepared for it and you're kind of like maybe partway there or not ready, things you can do along the way that can still get you primed and ready to go to take advantage of these opportunities. So we'll discuss those things today. Plus, after hours today, we got Palantir's earnings and they popped significantly. So we'll dive into some of those numbers as well. If you guys enjoy this kind of content, please do me a favor and hit that like button down below and subscribe to the channel. All right, so yesterday's video, we were discussing, all the fear we had in the market. We've got fear about our potential recession coming. We had the SOM rule that got triggered on Friday, and it has been 100% accurate in indicating a recession that's either coming or is hitting us right now. We've also got fear that is based around the election that's coming up, always uncertainty around that. We've got fear about the war that could potentially be taking place between Iran and Israel, with the US supporting Israel, causing even more tensions. Lockheed Martin was up significantly today. So a lot of these different fears that are out there are causing uncertainty in the market. Then we also saw Warren Buffett selling 50% of his Apple position. Now, some people may take that as a concern, but let's take a quick step back. Apple made up more than 50% of Berkshire's whole entire portfolio. That's a lot. Now, Warren Buffett's not one to sell stocks, but when it's taking up 50% of your portfolio and he's foreseeing, potential recession fears coming up, he's the one who says, be fearful when others are greedy and greedy when others are fearful. Well, the market was looking pretty darn greedy as of late, so he was selling these shares off during that greed time. He was being fearful. Now we are in extreme fear. We are at a 19 on the fear greed index. So right now, Warren Buffett is sitting here on $277 billion in cash at Berkshire Hathaway, just waiting for opportunities to buy something, companies, whatever it is. He could basically buy almost whatever he wants that's out there right now. So we know that he'd been building up his cash position to, cover insurance and other things like that, but this is the most that they have ever had. I think he's more kind of not concerned about Apple. I don't think he has issues with Apple as a company, or else they would have sold 100% of their position. I think it's more of a concern about the US economy right now, and he just wants to kind of protect himself and the company a little bit. So they're sitting now on $277 billion of cash. I don't think it's Apple specific that they're doing this. It's more of protecting their own portfolio and investors. But that is a huge indication that he's seeing a potential recession coming, and he's been through plenty of them. So if you're going to listen to anyone, he would be the one. So again, looking at the fear greed index, we are in an extreme greed at 19. We have been low before, but we could go lower. Again, we don't know where this is going to go from here, but when you look at the markets today, we've got the Dow down 2.6%, S&P is down 3%, NASDAQ is down 3.43%. Those are some pretty massive drops in the market, and that just tells us, obviously, extreme fear is out there. And so does that mean that now is the time to be greedy because others are being fearful? Well, yes and no. I think today was a great opportunity to, nibble a little bit in the market. But when I went over it yesterday, looking at the time horizon of what we've got going on, unless the Fed comes out and does an emergency rate cut, I don't think we're going to see any rebounding in the market significantly. We saw a little bit of a bounce today, but nothing really, this morning we started really off, but we still finished significantly down. So I think when you're taking a look at the election stuff coming up, still the unknowns from, Iran and Israel, potential recession, which we haven't confirmed. We only had the trigger from the SOM rule. Things like that really haven't, fully hit the market yet. So I do still think that we have some time to come down. I could be completely wrong. Maybe this is the bottom, but just based upon historical things and what Warren Buffett has done and some other stuff, signs that we've been seeing in the market, I think we still have some more downward pressure to go. So I did nibble a little bit today. Again, I'm going to get into my spreadsheet in a future video, just showing you guys what my whole strategy is. And I've been altering and tweaking it just as you guys should be doing with your own strategy as well. And I'll show you guys what I did to kind of give me indicators as to what stocks I need to buy, how much cash I have available. So some of the things that we're going to get into today are going to be what can you do to prepare if you haven't already, and what things can you do currently that are going to help you position yourself and take advantage of this market opportunity. So the first thing to do is clear your consumer debt. So right now we have higher than normal interest rates. We're over 5%. So if you've got a credit card, you may be pushing near 30% in interest rates on your credit card. That is a lot of debt that is working against you. When you don't have any debt and you have a lot of cash out there, they have high yield savings. Where right now on SoFi, I'm making 4.6% in cash. So high interest rates can either work for you or strongly against you. If it's working for you, it's going to work strongly in your favor because, again, 4.6% is significantly different than 30% against you. So that is why it's so important to get rid of consumer debt. So credit cards, high interest debt that you have that's out there, mortgages aren't as bad because that is an equity grower usually. So you can hold on to that one. If you've paid it off, that's awesome. But things like that you want to get rid of. So get rid of all of your consumer debt as quickly as possible. The next thing you're going to want is an emergency fund. This kind of holds true for a potential recession coming. Recessions hit hard across the board. You never know if anyone is going to be safe or not. You don't know if you're going to lose your job. You don't know if your company is going to go under. Maybe you are and you're comfortable and your company's not, but it could get very ugly very quickly. So you always want to make sure you have protected yourself. Minimum, you want about $1,000 in an emergency fund. That is just, very, very bare minimum. You want to have 3 to 6 months after that. If you can get to 3 to 6 months as an emergency fund, that's good. Typically, unemployment lasts 6 months. So if just in case you happen to lose your job for whatever reason, then you've got 6 months of that unemployment kind of time frame to have some emergency funds that are out there. Best case scenario is you have a minimum of 1 year emergency fund. Having more than a year may not make a lot of sense. If you've got it in savings that's making 4.6% interest, probably not a bad idea. But if you've got more than a year's worth of an emergency fund out there, maybe worth, putting more money into a stock market, into an investment, maybe buying gold, putting it into that high yield savings, whatever it is, but having it as an emergency fund may be overkill. For me personally, I add about $25 every single week into my emergency fund. So it's just adding up over time. Once I do get this house rented out, I'll be adding more of that over time because, now I've got an investment with other people living here with tenants, and I want to make sure I have enough funds put aside to be able to cover any expenses that are out there without me having to sell any stocks or anything like that. Especially if you're going to be going into a recession and the stock market's going to be down, being forced to sell your stocks when they are down is not what you want to do. Remember, buy low, sell high. I don't want to have to be forced to sell any of my stocks while they are low. Then I lose money and I don't take the opportunity to buy low to be able to make more money in the long run. The other thing I'm working on with my consumer debt is at my job, I get my commission check at the end of every month. My finances have changed with my new position. So I've been taking that money and paying off the credit card bill that I have, always pay it off in full. I haven't had to pay any interest on it, but I would like to get in front of that. I would like to have that lump sum sitting there so that I can both gain interest on that and I can just kind of pay my credit card along as I go and stay in front of it so that when I get my commission at the end of the month, I can take that and invest some of it rather than having to use it to pay off my credit card debt. That is my goal to get there either by the end of this month or by the end of September. Now, a great way to be able to do all of these things is to cut out any unnecessary expenses. I have a full entire spreadsheet with my entire budget that's on there. I track every single penny that comes in and every single penny that goes out. This way I can see, hey, where is my spending over budget? What other expenses do I have that maybe I didn't realize are out there? What other expenses could I cut that I don't necessarily need? For instance, I just picked up Amazon Prime because there's some shows I want to watch there. I may end up dumping Disney Plus because I'll be spending time on Amazon Prime. I don't watch a ton of TV, but again, why would I pay for both subscriptions if I'm only going to be utilizing one of them? So I may cut that out because I can add it back at any time. I have other expenses. Maybe I can cut down on my grocery bill. Maybe there's things with my workout supplements that I'm taking that I don't need anymore. I can cut those out. Lots of little things that you can go into and nitpick. If you're tracking your budget in detail, you can then go through and really pick out little things here and there and kind of plug away and pull some of that money out to put it towards your debt or invest it and take advantage of these opportunities in the market. And don't make any big purchases at this time. Rates are still high right now. If we are going based upon what the Fed is saying and what some people are expecting, we may get rate cuts faster than we originally thought. So we thought most recently that we were going to be seeing maybe a 50 basis point cut later this year. Right now, some analysts are expecting over a 1% cut this year. So if that's the case, you may be able to put those big purchases in at a much lower interest rate if you just wait a little bit longer. So I've wanted to buy a Tesla, been putting that off, and I'm still going to put it off longer. If I can wait till maybe this time next year, instead of myself getting, a 6% interest rate on that loan, I might be able to get a 4% interest rate. That saves a lot of money. Other big purchases as well. I'm looking to get a kitchenette. Getting a kitchenette for my house to be able to rent it out, I may have to take a loan at a higher interest rate. I may not be opposed to that just because that is going to generate some income for me as well. So I need to kind of balance and weigh those things out to see what the net ROI, return on investment, is going to be for that investment. Now, the whole thing about cutting expenses out as well only kind of perpetuates the problem when it comes to a recession, because recessions are caused by low GDP and consumers not spending. So if people are not spending because they're trying to protect themselves, just makes things worse. This is why value stocks typically do well, or at least better, during a recession, because value stocks typically produce or sell products that customers need, things that we need to go out and buy. Companies like Procter and Gamble, McDonald's, because it has food. While you don't need McDonald's, it's got food. And other companies that are out there that are producing these things are companies that get into Johnson and Johnson. Healthcare stuff is always going to be needed. These companies typically weather the storm better just because of that, and they typically pay a decent dividend. So if you're getting a dividend along with that, that means that you're going to be buying those stocks with those dividends for less. So a strategy could be getting into those stocks, not so much as a full safe haven, because there's really no safe haven, but at least you can generate some income from them. And that gets me into the next point, which is increasing your income as much as possible. Whatever you can do to generate more income. This is why I've been talking for the last year and a half about creating cash flow generation income sources. So I've got my YouTube channel. I have Beachbody that I'm a coach at. I have Patreon. I'm also monetized on Meta. I work as much overtime at my company that I can without burning myself out. And I have my dividend stocks that I've shifted a lot of my funds from Tesla into. Now, a lot of people gave me crap for that, but look at where Tesla's been doing over the last 2 years. I have been generating significant income from all of that money. Plus, I used a lot of that money from Tesla to buy this house, which is going to be generating me even more income. That to me is kind of what I'm looking at as cash flow generation, because the more income I have coming in, the more opportunities I have to be able to buy more of these stocks. So I'm trying to do a lot of that to bring more income in to take advantage of this. The reason you do that is the work twice as hard now so you can work half as much later. So I'm trying to work twice as hard now, taking advantage of these opportunities with the prices in the stock market, so that later, when all that investing comes to fruition and the stock market goes back up again, I will have bought a lot more for less, and then I can take a step back and not work as hard. So the next question is as well, when do I buy? What kind of cash do you have? How much cash should you have on hand? That is entirely different for everyone. A lot of people say 10% cash you want kind of sitting there ready to go in your portfolio. Some people say 10% cash overall for your entire net worth because it covers emergency funds. I'm going to talk strictly just about your portfolio itself. 10% is not a bad idea. I currently have 4.3% in mine. I am going to continue growing that, because don't forget, if the stock market is pulling down, your cash percentage is going to go up, because that doesn't budge at all. That stays stable. So you're going to have that cash percentage go up. So for instance, today, my 4.3% cash ended up becoming 4.34%, allowing me to spend some more money on stocks that dipped. That's how I've built my spreadsheet to show me when the stock market is down and how much cash I have available to spend to stay at my target. Now, once I hit my targets for all of my stocks and ETFs, I'm going to bump that up to 4.4%, building that cash pile even more. I want to do that because I truly don't know when we are going to see these blue skies. We still have so much uncertainty in the market. I don't feel that we are in the clear yet for me to go out there and spend more of this money. And I don't know if I'm ever going to dip below 3% cash, may even keep it at 4%, but I'm going to continue building this. So the way my strategy goes right now is I am still adding to the market, but I'm also building cash at the same time, keeping that balance in check as we move forward. So this way I'm not missing any opportunities, but I'm also keeping myself enough cash on the sidelines and cash flow coming in to take advantage of more opportunities that present themselves. So that's kind of my strategy right now for what I'm doing, things that you can do right now to prepare for the market if it's going to keep on pulling down, other things that you can do. And again, if this is going to last potentially, 6 to 12 months, you do still have some time. If you're at a point where you're not going to be able to pay off your consumer debt in that time, maybe take a small percentage, maybe take $25 a month or whatever it is. I started with $25 a month myself, putting it into the stock market. It was very slow. My portfolio when I started just 5 years ago had $800 in it. It is now currently over $52,000. Yes, a lot of that was from me learning over time and adding a lot of cash to it, but injecting your own cash in there and learning along the way is going to help build it. All right, so now let's take a look at another opportunity that presented itself today and then after hours jumped back up. That is Palantir. You guys can let me know in the comments below if you are an investor in Palantir. Just a side note, Tesla did dip down, open today at 184. Still closed under 200, so I would have liked to see it close over that 200 if we were going to go higher, but the market we're in right now, I'm not too concerned. But let me know if you guys bought Tesla this morning as well. All right, so Palantir here. Now, we are up almost 13% after hours. We were down 2.63% on the day closing at 2409. At the time of this recording, we are at 2720. Now, if we look here, we had this gap down on Friday, but if this holds true for tomorrow and we open around this level, and we'll basically jump over this gap. So based upon where the market's at, I don't know if this is going to be a quick pop and then sell off tomorrow, kind of fill both gaps that are created because it's going to kind of create a double gap here. So I don't know if that's what's going to end up filling. We'll just kind of have to see how it plays out. But as of right now, Palantir's numbers are looking solid and it jumped up after hours. We see government revenue rose 23% to 371 million, topping estimates of 349 million. In addition, the commercial revenue rose 33% to 307 million, topping the $306 million. And the US commercial revenue jumped 55% to $159 million. And the guidance was strong as well. And that's one thing that we have noticed lately with a lot of the earnings out there is the guidance. People who are guiding poorly are dropping significantly. People who are guiding that meets expectations also dropping down like a rock. So exceeding expectations obviously is boding well for Palantir at the moment. So they expect a revenue in the range of $697 to $701 million, when the analysts had predicted sales of $681 million. So they also hiked their 2024 revenue guidance by roughly 2%, and that is also significant. So currently where we're at with earnings and the way the entire market is going is guidance is so important. And Palantir noted that a lot of this is from the AI generation. So we have heard from a lot of other companies, Google, Amazon, companies like that, who are, AI has been a huge expense for them, but it hasn't really been a revenue driver. Now for Palantir, we're kind of getting some of the opposite. We are getting the revenue coming in for them. So if they can continue on this path, it will bode well for them. But again, I'm really interested to see how they're going to play out tomorrow. This pop is really nice. Will it continue up, or will we see a continued sell-off tomorrow in the market and then Palantir ends up coming down with it? Nobody knows for sure. You guys can let me know your thoughts in the comments below. But I think for Palantir long term, they're going to be a phenomenal company. They're going to be a company that a lot of other companies utilize to keep their business expenses low. We have seen that across the board with the companies that they have been working with, saving other companies significant amounts of money on their bottom line because they make that investment up front, but they are saving money in the long run. So I think we're going to see more companies doing this, especially going into recessionary type times where companies are looking to cut costs. If they can cut costs and see those cost cutting measures, affect their bottom lines almost immediately, which Palantir has been shown to do, we may see more and more companies going after Palantir to do just that. So Palantir is one to pay attention to. Again, seeing them as more of a medium cap company right now is one of those ones to pay attention to. How are they going to get affected by what's going on in the macro environment? For me, I'm an owner of Palantir, not a huge position. It's more in my, growth kind of section of my portfolio, which is the smaller portion, but I do still add to that over time. So just my thoughts on that when it comes to Palantir. I'm an owner. I think it's awesome to see these earnings. Just interested to see how that stock price is going to fluctuate as we go into these tougher economic times. So that's all I've got for you guys today. Thank you so much for watching. Let me know in the comments below if you guys picked up anything on the dip today. Let me know if you think it's going to continue dipping further. And I appreciate all your support. Thank you so much. Have a great one.